Hey everyone, and welcome to the Ask Assaad show. I'm Michael Gaines, host of the podcast NOV Today, and glad you are joining us for really this new show that we're putting together to really help bring additional conversation and insight around the energy industry, the markets, and things that pertain to that, and really get some insight from our in-house expert, Assaad Mohanna. So we are glad that you're joining us. So we know that this is a new show, and we'll kind of help give you some additional insight on what it is, kind of why we're doing it, but really how you can be a part of that as well. So we've got NOV's digital communication specialist, Shelby Dumaine, who will come in and just give us a little insight on what you can expect here on our new live Ask Assaad show. So, hey Shelby, what can folks get out of this and help them understand how they participate? Kind of give us a rundown.
Absolutely. Thank you so much, Michael. I am so excited for this new show.
Yes, I know. You told me you said I can't wait for this show.
I know. I'm really pumped. I think this is such a great opportunity for our audience to learn, and I always love learning more about the industry that we all work in as well. So like you mentioned, Assaad is kind of our internal expert. He's who we always go to with our questions. And we all thought, why not open that to the rest of our audience and find what questions you guys have out there online. We go live on Facebook, LinkedIn, and YouTube. So we want to get as many questions and hear what questions y'all have for Assaad so that he can answer you as well. So each week, we're going to ask Assaad one big question. We're going to focus on one topic about the industry, about the market, and kind of do a deep dive into that. And then near the end of the show, we're actually going to open up our mailbag, which is comments, emails, and phone calls taken from our audience throughout the week prior. And we're going to go through those and do some quick little miniature deep dives, so maybe medium dives on those questions as well. So you're watching at home, if you do want your question featured on a future episode of the Ask Assaad show, there's a couple of things you can do. You can comment your question here on this video, and we'll make sure to compile those and add them to our mailbag. You can also email us at our new email, askassad@nov.com. There it is on the screen. Or this is the one I'm really jazzed about. If you can't tell, you can call us. We now have a phone number. So say you want to leave a message for us anonymously, you can, or you can leave your name in that message and we can feature you on the show. That number is 346-223-4799. So we would love for you to call us. We check that every single day, as well as the comments on these videos, and of course the emails to askassad@nov.com. So I'm so excited to get the show going with that. Michael, what is today's big question that we're asking Assaad?
Yeah, so today's big question is really titled 3-month look back. So, what are the implications that the oil challenge that we've had has been? What has that been on the oil and gas industry, and how do we look at that? So we are going to jump in and take a gander at that question. And of course, we've got Assaad Mohanna, the Director of Business Strategy, here to join us today. So, hey, Assaad, thanks for joining us on, I guess it's no confusion. You're Assaad, so this is your show.
Yeah.
So,
hey, Michael,
thanks for joining us.
For having me.
Yeah, no, absolutely. And to echo what Shelby said, we're excited to have this opportunity to really give some of the insight that we have at NOV and able to gain from you and your insights and share that with those that are watching. So
thanks.
Yeah.
I also, sorry, Michael, I also share the excitement with Shelby. I'm happy we made it to show number 2 on our live show after last week. So thank you for having me again.
Yeah. Oh, yeah. No, absolutely. So you passed the test. Congratulations. You're still allowed to have your show. So so that's good. We'll talk about the car mechanic stuff another day. But yeah. So of course we said we're talking about really impacts on the challenge that the oil and gas industry has faced very, very apparently recently, and so kind of taking a look back on what that really means. So maybe we can just kind of dive in. When we're looking at the market and the dynamics therein, what have we really observed, and kind of where are we right now based on kind of the analysis that you've done so far?
Yeah. Well, it's certainly been a historic period for our industry as a whole. We've seen a lot of struggle in the last 3 months, but I want to go back, maybe start off with 2019 and say how that led on to where we're at. If we look back, 2019 was kind of the year things started to pick back up or stabilize, at least around $50 or $60 per barrel for WTI, and that was great news for most companies. As a little bit of consolidation, a little bit of increase in demand had started to show up, and kind of forecasts were all directed towards 2020, maybe 2021, for things to pick back up and see an upswing. Everybody's trying to get ready for it. But comes January 2020, news about the COVID-19 pandemic started looming. And that immediately hit the Chinese economy, obviously. And the Chinese economy being really the driver of the global economy, since that's really what most have been waiting for to kind of move the rest of the supply chain around the world. That on its own took the price of the barrel down from the high of 62 down to the 50 level. Jump forward to first week of March, and that's where we saw Saudi Arabia, who had failed attempts to reach an agreement with Russia or OPEC plus on extending the production cuts. So that those two kind of effects, first COVID-19 and then the price war, which presumably was Saudi Arabia going after market share against Russia, but maybe also against the shale world, combined together was a recipe for catastrophe for our industry. Along that kind of progression, China was not the only economy that was impacted, or Asia wasn't the only place that was impacted by low demand for oil. That kind of spread out as more and more countries exercised lockdowns. And we saw as much as 30 million barrels per day gap between supply and demand, which is huge. I mean, just from the levels of 102 million barrels of supply and demand with a gap of about 1 million barrels, all the way to 30. That's a massive gap to fill. So supply wasn't able to react fast enough. OPEC Plus did track back and announced a cut in production by about 10 million barrels. The U.S. operators somewhat willingly went ahead and started shutting in wells to reduce that excess supply. But that was not enough to stop WTI index or price of oil to go into the negative for the first time, first into the 20s, historic levels, and then into the negative for the first time in history. And what that means, I mean, when the price of oil is in the negative, that means somebody who has that contract and hoping to make a gain from selling it to the next guy was willing to pay money for people to take off that oil off of their hands. And we made the example of that trader that's sitting in New York that's really looking at this as a business transaction more than looking for barrels, or hoping to sell it to an aviation company or a facility, but didn't have the chance to because there was no demand. That all led to people just wanting to push over these contracts and take WTI into historic levels. Storage facilities filling up really quick. There's not enough draw. Brought up, Cushing, Oklahoma was the place of trade, and that was no longer a place where people wanted to pick up any of that oil out there. And kind of things stabilized since then. At the level of the WTI and Brent kind of leveled back on into the positive around the 20s. And today, believe it or not, we're actually seeing some sort of a rebound that's lasted quite a bit so far. We're at $37 WTI, $40 Brent, and really good signs of recovery as more countries loosen up their measures for COVID-19. But that, of course, comes with that optimism comes with caution, right? There's We already starting to hear news about a second wave or third wave or whatever wave it is, but more so fears of the economy being hit again by that impact. So
no, I think that's going to be interesting to observe. I mean, one of the things that that I've continued to take an interest in is looking at things like aviation travel, and looking to see, okay, obviously a large consumer of jet fuel and other petroleum products. So how will that play a role in the recovery? At what point does their recovery need to reach in order to trigger some additional momentum here? Or of course we hear a lot about automobile travel and things like that. And to your point, it looks like some economies are starting to get back to a closer to a normal or new normal, whatever phrase you want to use. So I think those are going to be interesting things. I think maybe even for a future topic, that might be something to really look into, is understanding the dynamics of how those kind of play a role. But yeah, very, very interesting to observe. So maybe looking kind of the reaction to some of these market forces that we've seen, that we talked about, that you mentioned there. So what has been the response or the industry reaction to the downturn, and how have operators and service companies, now that we have pretty much a 90-day look back to reference, how have they approached it, and kind of not necessarily projecting forward, but at least looking today, what does that response look like in action?
It's certainly nice now looking back and seeing the full picture and kind of mapping all the reactions. But back then, I remember, Michael, and you and I had this conversation, how you're waiting by the hour for news and just trickling in, and it all started, I think, early January was when operators started slashing their budgets for 2020, and that's really kind of how things kicked off. One company after the other saying that, we're going to slash by 30, 40, 50%. And as a result, we lost about over $100 billion worth of CapEx budget that ended up being slashed. The other immediate reaction, and that's one we're getting, the industry's fast in reacting with, is rig count. The drop has been nonstop since the beginning of the downturn. We were close to 1,000 rigs on land. Now we're closer to 300, and that's not a level that the U.S. has seen in history since ever rig count has been tracked. We've heard some of the first quarter earning calls for most operators, contractors, and how everybody's feeling the pain, and how everybody's had to write off billions of dollars because of devaluation of their assets. Another reaction we saw was slashing of workforce and reduction and restructuring of organizations. That was painful to see, and we still see that till date. And for this time, it wasn't restricted to service companies, which has historically been the first and a lot of times the only, or predominantly the companies that reduce and restructure, but also heavily affecting operators and E&Ps, because the pain was not just with immediate cash flow, but also with long-term cash flow. We saw bankruptcies, Michael. We saw a lot of companies having to default on their debt. Started off, I remember, with Whiting Petroleum, Diamond Offshore, the offshore driller. Recently heard news about Chesapeake, Valaris missed a payment, amongst many others. I think we're seeing more and more companies in distress just due to the fact that they're not seeing enough cash flow come in so that they can service their debts. And maybe it's painful to see, but maybe that's what the market requires for it to balance back to healthy levels. I think most companies will end up resurfacing after some sort of restructuring deal with their lenders. They'll resurface hopefully stronger and leaner, and better able to fill in the right gap in this space in the economy. And really kind of related to that, one problem on the lending side is that with shale, it's been such a cheap lending source of funding for companies. So it reduced barriers to entry into that space, and kind of drove cost of service down, drove that gap between supply and demand down, and really taken out the competitiveness and differentiation away from the market in certain locations, obviously.
Yeah.
Those are kind of the reactions that we've seen in the last few months.
Yeah, and it's interesting. So I'm looking at some of the comments going on in conversation in it looks like the LinkedIn platform, and so there's one comment in particular saying that it looks like, you know, there's some positive news on the horizon, being some rigs starting to be picked up again. You know, don't know in what capacity, but to your point, I mean, just looking at the price of WTI, it looks like there could be some forward momentum going on, which of course I think you use a phrase appropriately, cautious optimism. That, you know, that we're definitely optimistic and know that we will get to that point of really getting folks, you know, back where we'd like, but just need to kind of see how the markets play out.
On that note, yeah, there's I think it was ConocoPhillips that mentioned a couple of days ago that they're starting to see levels of oil price kind of in the healthy space, and they're ready to ramp back up. And ConocoPhillips is an exception because what they've announced in their last analyst day, I think it was November 2019. I think they mentioned that over their earnings call, was that they're following an optimized pace of development. So they're careful on or about how they develop their fields and their assets, and it's not the price of oil that drives them, because if they do that, then they end up increasing rig count when the price is high, and reducing activity when the price is low and you know, the market's good. So I wish everybody or most companies kind of follow that optimized pace of development, because that's a healthy way of looking at it. If companies stop looking at production as being the end all, and really look at value to the shareholders, then we'd be in a better place.
Mm-hmm. Yeah. So, I mean, when you look at you know, what we've seen so far, so, you know, since you know, kind of the February March time frame to now, just kind of in your perspective and based on the research and analysis that you have and continue to do, you know, what are you seeing both kind of in a short term and long term implications of, you know, the COVID and really, I guess, the price war to a certain degree, the kind of that 1-2 punch. What are some of the expectations that we're looking at?
Yeah, if we look at kind of what we just talked about, the reaction that's been taken, that's drastic. Companies are restructuring, and it's not just the small companies. I think there will be a period of time of pain where companies will have to restrain on activity and spending, and really go back to perhaps some fundamentals. And that's you know, we mentioned ConocoPhillips kind of rethinking how we look at oil price and activity, but really on a broader spectrum, how do we make this a less volatile industry while keeping shale as a healthy, significantly contributing to the economy factor. The ramp up is not just a switch back on, so there will be a buffer time. McKinsey does this or did this report recently where they talked about different scenarios, and their best case scenarios project for a recovery in 2021, maybe 2022, to get back to the $50 to $60 per barrel levels. Some of the worst case scenarios or less favorable scenarios don't reach that level until 2024, and in some cases we just don't ever get to 50 or 60. So there will be some years of rethinking and really addressing the first the financial the lending model that's out there, and how do we make it so that entrants are able to provide value, and how activity is really contributing to true demand, not because the oil price determines what that demand is. And then, of course, technology, and how do we raise the bar, and how do we fix the issues that we've been struggling with, and how do we demand, and how do we make remote operations more common, and automation less of the exception, but more of the common regular way of doing things. When I look at the implications of the industry, Michael, I kind of like to break it down between the upstream, the operators, and the OFS, or oilfield services, OFSE, really, OFS services and equipment. For operators, price of oil has dropped, less cash flows coming in, balance sheets are getting weaker. So that's due to lower demand for their product. So what we've seen historically in downturns, and what could be expected, is broad restructuring to occur, and that's made possible by the fact that these shale players came in. This very sized shale players with balance sheet that became a bit weaker today. We have over 100 companies out there that are decently sized. Is that the right level? Is that the right amount of decision making out there, or players out there that result in a healthy, or is there room for consolidation? What some theories out there are that only the big companies will be able to survive because they can, and they have the history, the experience to weather and experiment and change and drop the price. But also the smaller and truly nimble companies that are able to innovate to survive. And on that, if you're able to reduce the cost per barrel, and that's really how you differentiate and become a leader in that space. That's how you become resilient and guarantee you'll live this to do. So yes, shale I think will remain a significant key player in our industry and economy, but hopefully the race to production, it will no longer be the priority anymore. And last, the second part of the implication on the industry, talking a little bit about OFSE, or oilfield service and equipment. The OFS companies walked into this crisis already financially distressed. Been struggling for 4 years of reduced prices, activity, margins, profitability is collapsing, and think about frac spreads and how many new builds had to be commissioned, and how many are we seeing in yards today? Really, that extremely fast ramp up made the market become overserved, and now that's obviously way overserved now. That really walking of the OFS into that space, financial distressed, heavy on capital, puts a lot of pressure when there's debt to be served. So we did see a big wave of bankruptcies and restructuring in 2014, 2015, but maybe although the 2015 to 2019 downturn was generational, maybe it wasn't as generational as the one we're in today. So some liquidation is probably going to happen, some consolidation in that space as well, that could be connected back or mirrored to what happened in the 1980s, a conversation we had with Lawrence Singletary, our Chief Industry Relations Officer. Right. And really combined with all that change, Michael, I think a new wave of supply chain models, business models, faster way for technology to get into market, and more partnerships between OFS and customers, or OFS and players from outside the industry could probably emerge in the future.
Yeah, no. So I mean, you've hit on quite a bit, which of course, in this sort of 90-day look back, or last 3 months that we've been really really enduring, I think is probably the best word. Folks really trying to endure this challenge that we've been in, and so there are a lot of topics and concepts that have come out of that. So as you were talking, I was jotting down a few that I think hopefully the audience will be interested to hear some of your perspectives on, or at least maybe even a kind of 101 when we're looking at kind of markets overall. We're talking about financials and how, especially in the lending space, right? So shale and lending, how does that work, and how did companies, how were they impacted both positively and maybe not so much maybe challenged in that space, and kind of what's the expectation today, looking at the idea of recovery, if some of these models are saying 2021 plus, right? So if we're saying 2022, then it's like, okay, well then what technologies or what areas in between now and then are folks really going to be looking at in order to help continue to drive business and efficiencies until we get to that point, economic. So I mean, barrel economics, I know that you're really passionate about that, which is just a future conversation we can have. Okay, well, help me understand the price of a barrel of oil, what really goes into that, what are areas that we can look to increase efficiencies as a market, so some of those things I think might be some future topics that we can cover here, and of course also get insight from viewers on what they want to hear and really talk about and get some insight from. But I think that's really, really good perspective, at least to start out and to understand, okay, this is where we're at today, this is where we've been the last 3 months, and then kind of start looking ahead to hopefully, continued brighter days, or I guess again to quote you, the silver lining, right? So there's always a silver lining, and maybe that's a question I'd like to have for you, maybe before we get to Shelby and start pulling in some of the questions that we had folks already send in. But if you're looking high level at silver linings or the Assaad good days, whatever you want to phrase it as. What are some of those just high level bullet points that we can kind of be looking forward to?
Yeah, I said this since the first days of this downturn. It's painful, it's hard. There's going to be some suffering, but there's also some positive things that could be done during this crisis, and that could result after this crisis. I think the mentality change that we could see in our industry, the openness to fast track technology, the willingness to kind of try new things, and we start seeing this in our conversations with our customers and our partners, and how there's that all of a sudden less resistance to bring new ideas to the table and try things that otherwise we would have considered too extreme. The remote capabilities, the safety aspect of this downturn as well. Everybody's talking about how do we do remote operation? How do we get put less people in danger? All those are extremely good outcomes from our industry that, to me, I really like to associate with. As somebody who gets in the energy space as a whole, being a steward of a good steward of the people that we put on locations away from harm's way, and get to a safer and more better performing space, especially with companies also bringing up energy transition and efforts to diversify and spill over expertise into that area. I think all of those are great opportunities for us as a company and for us as an industry as a whole.
Yeah, no, and looking forward to those brighter days for sure. So I think at this point in our program, we're going to go ahead and jump in the segment that we like to call our mailbag. So that's either calls or emails that we've gotten from folks that have reached out to us to maybe get some of your insight, Assaad. So with that, let's go ahead and bring in Shelby. And all right, Shelby, mailbag time. We don't have a jingle yet, so we're working on that in the early days. But mailbag time, right?
Absolutely. You know, I'm going to make sure a jingle happens for sure. And maybe a whole mailbag and everything. Yeah. I love this. So our first question comes to us from a CTO within the oil and gas and marine industry. His name is Shankar, and he was wondering, what does fracking economics in the U.S. look like post-pandemic? And is the fracking business model in U.S. sustainable at the current cost?
Yeah, that's good, because we kind of touched on that a little bit, Assaad, right? So yeah, how do you see that based on, again, the data that we're seeing and kind of some of that analysis?
Yeah, I think it's a great question. We touched a little bit on the frac spreads and how that's escalated in terms of supply quite a bit. Takes me back to a presentation Andrew Gould did for the Rice Institute, or the Baker Institute at Rice, and he was, Andrew Gould being the ex-CEO of Schlumberger, explaining why that business model's pretty much broken. That excess supply, that access to low interest rate funding has made all these players build more and more assets, which ended up flooding the market with all this iron that's now laying down in yards. Whether that business model is sustainable or not, I think with shale sticking around for many years, I think there'll certainly be space for that. Operators try to own their own fleets, but I think that not being their core business was problematic. I think what will help facilitate that relationship between the service companies and the operators is better communication on plans. It's greater technology and digitalization of all these assets, making the need for 300 frac fleets to support 20,000 wells a year obviously too much to support that market, and maybe leveling to some sort of a medium where there's enough supply and enough demand to keep that space a healthy, less volatile one.
Mm-hmm. Absolutely. So this next question comes to us from civil engineer Iqbal, and it is quite a big question. It could probably almost qualify for one of our big questions each week that we ask you, but we're going to try to do it all here in the mailbag. So he was wondering, what is the future of the oil sector in the next 15 years?
Yeah. Well, it's sure. I think for those who think that oil and gas is going away, I would say it's going to be around for a few decades still. It's according to that McKinsey report I mentioned earlier, they think it's going to be a multi-trillion-dollar economy for many years still. But it's a relevant question because yes, there is the emergence of renewable energy, solar energy sources, wind energy, and all of that fits into that similar space. They're not two foreign industries. I think there's lots of commonalities. Any transition of any sort needs a lot of what oil and gas companies do. And oil companies can contribute to that transition. So there will need to be some reinventing of identities, some restructuring, as we've already seen companies change in their structure and build up solar farms and wind farms and change names. And but certainly oil sector will still be around at least in the next 15 years, to answer the question.
Mm-hmm. Good, fares well for us. So this next question, Kelly Gregory wrote in, and she told us a little bit about how she mentors young professionals and students about their career within the industry. And so she was wondering if, given our transformational and very agile business, what is your advice for the next generation of our industry, construction and project industry?
I truly love that question, Shelby, and I think it's a very relevant one. Yes, there's a if you're a fresh graduate from school today, you're looking at oil and gas and say, "Ooh, why would I want to get into that space? There's a bloodbath out there, and I don't want to be part of it." But if you think about it with a more open mind, and you look at what sort of opportunities the challenges that we're going through today open up, and you really bring a problem-solving mindset where if there are challenges and issues to be solved, then there's room to make a change and leave an impact and help with the overall transition. So definitely a great time for fresh blood and fresh minds to join in.
Great. Yeah, no, I think those are really good questions that we got from our mailbag, as we call it here in the Ask Assaad show. So if you have a question that you'd like Assaad to answer, or at least to be able to entertain, feel free to send us an email, and that's going to be at askassad@nov.com, or you can call our viewer comment line at +1 346 223 4799 there on the screen, and we're happy to take your question, whether you'd like to leave your name or not. That's up to you, no problem. But we definitely want to give everyone the opportunity to participate in the conversation, because the questions and concepts that we've been talking about, and Assaad, that you've really been shedding light on, are really good but big questions and ideas that certainly going to take a lot of perspective and conversation to tackle. So I think that'll be really good. So I want to encourage viewers to definitely take part in the conversation.
Yeah, I appreciate your time, Michael, and thank you for doing this.
Absolutely. Well, thank you for being here. Thank you, Shelby, for helping facilitate our mailbag. And I know that we're excited to have continued ongoing conversations there. So for as we look ahead, I know, Assaad, that you'll be providing us with additional kind of perspective and questions for each episode. So we'll look forward to having that conversation with you next week here, same time, 1:30 p.m. Central Time. So for all of us here at NOV, on behalf of Assaad, Mohanna, Shelby, Dumaine, and our production team, I'm Michael Gaines. Thanks for joining us, and we will talk to you later.